Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities extended the positive momentum for the third consecutive week on region-specific developments. In the US, major equity indices gained around 1% for the week after a decline in personal consumption expenditure, which is the Fed's preferred gauge of inflation, eased to a 0.1% month-on-month, fueled hopes of aggressive policy easing by the US Fed in the November policy meeting. Asian equities rallied after People's Bank of China, along with other regulators and policymakers like the CSRC and NFRA, announced a package of policy stimulus measures that spanned across monetary policy, property, and equity markets. Chinese equities rallied 17%, followed by Hong Kong, which rose around 10%, while other North Asian markets gained about 2 to 3%. Back home, Nifty index also continued to maintain its positive momentum, scaling new all-time peaks, rising 2% for the past week in line with other Asian markets on continued foreign investor inflows. Broader markets continued to underperform the Nifty index, with the Nifty Mid-Cap Index up 0.3%, while the Nifty Small Cap Index was down 0.5%. Among sectors, metals, auto and energy led the winners with gains of over 4% for the week, while banks and defensive sectors like IT and FMCG closed flat for the week. The Indian fixed income market had a volatile week. After declining initially, the Indian government bond yields rose across the curve on Friday after the government's second half of fiscal 2025 borrowing calendar showed that it intends to keep the borrowing plan unchanged at INR 6.6 trillion, surprising markets that were expecting some cuts in the overall borrowing for the year. For the week though, the 10-year Indian government bond yield closed flat at 6.76%, while the 3-year and 5-year government bond yields changed 1 basis points and 0 basis points respectively. The INR fell 0.1% against the USD over the past week to close at 83.7 per dollar, lagging other Asian peers. INR gold rose 2.2%. Brent crude oil fell 4% for the week to close at $71.9 per barrel, as investors weighed the uncertainty on supply and demand dynamics after the OPEC Plus decision to ramp up production against an improving demand outlook following fresh stimulus announcements from the top crude oil importer, China. Among the macro updates, there wasn't much except India's foreign currency reserves, which rose 2.8 billion for the week ending September 20th to end at USD 692 billion. With this, India's FX reserve have touched new highs for 5 consecutive weeks, driven by a surge in foreign currency assets, which rose USD 2 billion during the week, followed by gold reserves, which was up 726 million, while special drawing rights was up 121 million. Well, at this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.